The major question every trader has is how do you tell if a trade is going to go higher or lower before you would essentially get in. Now obviously there is no crystal ball in the markets to tell you when to trade is going to go higher or lower. However, there are certain tools and things in the market that we as traders can use to our advantage to give us a higher probability of exposing where will be the next movement. And by doing so, we will have a higher chance of buying profitable. In this video, we are going to talk about RSI divergences. Any divergence is an early signal of a recent change in the price trend in the relevant time frame. Its timely detection and determination of accurate price targets is a great advantage in trading. First, how to set RSI. Second, how to determine the price target and calculate its value from the divergence. Third, illustrative examples. Without further ado, let's jump into my computer. Okay, I have a completely candle neck chart. So the first thing I want you to do is to go to the indicators tab right here and type RSI. Just add a relative strength index. Now you have to adjust your settings exactly like this. Go to here left and click this settings wheel. First you go to the input tabs and leave the length on RSI to 14. Then go to the style and uncheck all the unnecessary things like RSI based EMA, upper and lower Bollinger Band, RSI upper band, RSI lower band, and overbought and oversold fill. Don't forget to separate the RSI middle band to 1, 2, 3. Make it a line, a solid line, not a dashed line. And now you can change the RSI color from this to blue and make it 1, 2, 3. Make it thickness to 3. Okay, I like blue because that's the color theme of my channel. Now you can also remove the RSI background fill so it doesn't distract us, and Bollinger Band's background fill too. Then just press OK, and now your RSI indicator will look exactly like mine. That is good. The RSI is a momentum indicator. It is showing momentum in a specific direction. Likewise, it also shows a loss of momentum in a certain direction. That's where the divergences come into effect. Now, I'm not going to explain the types of divergences here, because I have a special video on this topic. If you don't know about RSI divergences, click here, learn them, and then go back and watch this video again from start. That's it. Go 4-hour time frame. Here you should know that the larger time frame you use, the more accurate the divergences calculation will be. Don't worry guys, they also work quite well for scalping, of course when combined with the market structure. The only thing we are interested in here is to see about divergence. We note this wall and the next lower wall on the chart. Then on the RSI we mark a wall again, but next we have a higher wall. So here we have a regular bullish divergence from this wall to this lower wall and from this wall to this higher wall. This is the area where the divergence has formed and where we will make the necessary calculations. What is the order of calculations? The order is as follows. We take the value of the lowest RSI wall. We can see it from right here left. We can see it. So here is exactly 25.63. Then we take the values of the higher bottom, which is exactly 32.21. And now the most important thing, we open the calculator and start calculating, of course. We subtract the value of the higher bottom, 32.21, minus lower wall, 25.63, 25.63, say 6.58. We are doing this way because if we subtract this value minus this value, we will get a negative number. Okay, the price goes down, but the RSI goes up. So we will add this difference to the higher value, plus 32.21. okay, 38.79. Now we take one horizontal line from here, okay, horizontal line, out plus hash, put it just here and go to the settings, coordinates, and one more time copy this value from the calculator, Ctrl plus C, and just paste it right here. But just a moment, coordinates, and paste it, and then click OK. We are looking at where this horizontal line will cross the area, the RSI oscillator. To make it more clear, from the second bottom of RSI we look back, forward we don't know what's happened, and for the moment we don't care. So here we notice that the first touch is right here, the second touch is right here, and the third touch is exactly here. This here isn't a touch because this is a consolidation and we don't want to mark this as a touch. So this is our first touch. Take a one vertical line from here, put this vertical line exactly at the crossover here, second and third. Accordingly to this vertical line correspond a bar on the chart. When we found this bar, we take again a horizontal line and mark the close of the bar. I repeat, the close of the bar. So the first target will be right here, second target and third target. Okay, this is the targets that the price going up will reach. And as you can see with the further price development, the price makes this bullish divergence and start going to the upside, hitting our first take profit, then second, and then third. And as you can see, when we touched this third take profit, we are making a massive correction to the downside. Then the price breaks the last high and make a new divergence. But this divergence is a bearish divergence. This bearish divergence is from this peak to this lower peak and from this high to this higher high on price. So this is a regular bearish divergence. Okay? A regular bearish divergence. In the case of a bearish divergence, the order of calculation is the same but reversed. We take the value from the highest peak from the RSI minus lower peak on the RSI. Now we are calculating how much is their difference. So the first one is 76.67. 76.67 minus 74.85. 74.85. Now we have to subtract this value minus lower high 74.25 minus 1.82 makes 73.03. Take this value, Ctrl C, copy this value, take a horizontal line, paste it right here, delete this horizontal line from here, paste it right here, go to settings, coordinates, paste the coordinates, click OK, and now another one. We are looking for a crossover. So the first crossover is here, second crossover and third crossover. Take a vertical line, first, second and third. Okay, then another 3 horizontal lines, close bar here, first target, second target, and of course third target. As you can see, with the further price development, price hits first target, then second target, third target. When we hit it, the third target, price makes a significant reaction to the upside but can't break this higher high and makes a lower low. So it begins a new trend. Things are from this month and last month. Simply this calculation works. And now bonus for you, if we break below this low and close below it, we are gonna to retest this high and of course new lower low, or at least price 1000. And now, not to confuse you, let me show you the formula. Okay, when the price are making a high, then follows another higher high, So this is the price, rise. But on the RSI, we are making a high, then a lower high. If we mark, so this is a RSI, RSI, Relative Strength Index, okay? This is RSI. So if we mark this high right here from RSI with point A, and this lower high with point B, this right here is a bearish divergence. With the letter X, we mark the final result. So the formula would look like this: B minus bracket A minus B bracket straight X, or in other words, this high from RSI minus this high and the straight minus B makes X. When we have a X, when for example the X is 50, a 50 is right here. For example, when we see the previous touch from this horizontal line and the RSI, we mark a horizontal line from here, and at the close bar here would be our target. For example, on the lower time frame, the price are making 1, 2, 3, 4, 5, okay? When we break above it, retest here, we can enter into short position from this bearish divergence here, putting our stop loss before the previous week high right here and the target here. And this would be a 1 to 2 risk to reward ratio. So this is a bearish example. Let me show you a bullish example of this formula. Okay, so when the price, again, price, are making, for example, a low, then a lower low. But on the RSI oscillator, RSI, we are making a low, then a high low. So this is a RSI. A low follows a lower low. A low follows a higher low. So this is a bullish example of a bullish divergence. If we mark this lower low here with A and this lower high here with B, the final result would be X. So here the formula looks a little bit different. The formula would look like this: B, okay, plus bracket B minus A bracket straight X, or in other words, this higher low right here minus this lower low from the RSI plus this higher low makes this, okay? So this is the formula. And when X, for example, another example, when X is here 50, for example, this here is 50, when the horizontal line touch this oscillator, RSI oscillator, we mark this zone with one vertical line, and exactly at this point right here is here a relevant bar. On the close of this bar, we put another horizontal line to the right, and this would be our take profit, our target. Okay? So on the for example, this is on the 15-minute time frame. On the 1-minute time frame, we are making this move: 1, 2, 3, 4, 5, 6. When we have a bullish divergence right here, we have a change of character, then a retest. So this here is our change of character. We have a bullish divergence. We calculate this value. We have a target, okay? We can enter into one position. So on the retest here, we are enter, for example, here, putting our stop loss below the swing high, below the swing low, excuse me. So stop loss, and the target here. minimum 1 to 2 risk to reward ratio. That's it. That's if B plus bracket B minus A bracket straight Higgs. Higgs value from the RSI oscillator, first horizontal line, first touch, upside the vertical line, target, entry on the lower time frame, minimum 1 to 2 risk to reward ratio. That's it. That's all for today, guys. A video for mastering the RSI Divergences right here. Don't forget to subscribe or any trading zone will hit your stop loss. If you're looking for a broker, go sign up, link in the description. Our trade has a Forex, crypto, stocks, commodities. Till the next time.